Oh, morning all. How we doing? Anybody on the DAX gap fill this morning? It's just that's actually yesterday's close. So it's just on its way there now. I took this one this morning on the open, put two positions on. I'm just trailing it down at the minute. Just giving it. I'm going way beyond the gap fill, but yeah. Gap fill's working if you took it. Not actually sure where I'm targeting with this. Somewhere down there. I don't care really. I'm just putting some targets in. It's trailing. It's locked in. It's going to make money. Morning, Bruno. Whoa. Try and grab that out of the way. Morning, Michael. So we'll see how that does this morning. Morning, Andy. Right. I should have announced that in the group. Didn't really think about it this morning. I just saw it and took it. Today, where are we? Wednesday. So we had CPI this morning. I took a short on the pound US dollar this morning as well. I'm not quite sure what I'm going to do with it, to be honest. I'm targeting basically the. Oh, you can't see that, can you? Let's put it in the screen so you can see it, eh? Wake up. I'm just targeting these highs at the minute. So I took a short based on CPI this morning. I'm not quite sure what we're going to do with the pound this morning because we've got the budget at somewhere around lunchtime today. So I'm just going to target there for the moment, which is a kind of little scalp trade. But I think potentially we are short on the pound now. So we have got today, obviously, the budget. So CPI this morning came out as, positive, but it's just about what we were expecting, basically. We've got Bailey and Powell both talking at 12 o'clock today, and at some point we've got the budget. So there's a fair amount of potential movement on US dollar and pound today. So just be aware of that. And then we've got oil this afternoon. But the CPI figures didn't really do much this morning for the pound. It moved, obviously, as you can see, but not dramatically. So we just got the reversal on M15. We're just tapping into this chop at the minute from yesterday's ridiculously tight. Look at that for New York session yesterday on the pound US dollar. What did we get? Literally about 30 pip movement. Awful. But yeah, so that was basically yesterday's pound US dollar session. So I think we'll get through that chop, and I think we'll be coming down today to target these areas. So just got a hammer forming just before the open on the DAX, and the gap fill is done. I'm just going to take one of those positions off and leave one running. Actually, no, they're both trailing. Should I take one off? Yeah, I'm going to take one off. I'm going to leave one trailing with 200 pip stop. So I'll probably get stopped out of the open because it'll wick up. But yeah, so DAX gap fill's done. ADRs today, nothing so far. We haven't had any movement on anything. There's a fair few weeklies hit already. So any weeklies that hit by Wednesday are interesting. Hi Mayo, Franco, James, Professor QDA. Dion. Well, Professor, you should know why your broker does not show any gaps, because your broker is manipulating the market. So there's two types of broker: scam artists and real ones. This is a real broker. No, I'm joking, but this is this broker, Robo Forex, only shows proper market information from the futures market. Yeah, so the DAX opens at 7 a.m. UK time, and anything that happens between there, and there doesn't exist on the futures market. Yeah, some brokers, like this one up here, which is Traders Global, they show what's called pre-market data, which is made up data based on what is happening with pre-market stock pricing, but is not actual transactions. So this is broker made up stuff, forecast if you like, or predicted what would have happened if the market had been open during those times. So it's not real, but it's close to what would happen. So if you have an eye on the stock market, it'll be probably what would happen, but it's not real data. So if you get this data, it's not real. It's like synthetic index. So just have to be a bit careful trading it, because obviously they can do what they like with it. They know where your stops are. Where was I? Yeah, so where was I? Completely thrown me off now. I don't know what I was talking about. Sorry, ADRs. Weekly ranges. Yeah, so these weekly ranges, we've got 2 minutes to the open. Aussie dollar yen. Oops. I keep changing my time frames. Stop it. Aussie dollar yen, we know about the yens. Off the scale, we've hit its weekly range. 125% of its average weekly range has been hit already. CAD yen, Swiss yen, all of them have hit their normal weekly ranges by Wednesday, and are, as of yesterday, all looking like a rejection. I've taken a short on the New Zealand dollar yen on one of my other accounts as well today, because I think we are above extended levels now. So, morning, Peter. All of these yens, basically, it's all pretty obvious. They've all smashed their weekly ranges. New Zealand dollar Swiss has also hit its weekly range so far, and that's bounced off the highs as well. New Zealand dollar yen has, and pound Swiss has also done the same thing. Markets open. Just getting stopped out on my trailer on that DAX. Pound Swiss is coming down very, very nicely off of that double top. Obviously, that's coming off of CPI figures. Manipulation, yeah. Couldn't make it up, could you? Let's push the market up. Let's take out the liquidity just before the CPI figures are released. If you ever need any proof of manipulation. And Euro Pound. So Euro Pound has also hit its weekly range, but I wouldn't be looking to long the Euro at the moment. Regardless of what's going on with the pound, the Euro is incredibly weak. So be looking for shorts on that one. Right, so let's have a quick look at the market, where we are. Wow, big spike back down on the DAX then. Morning, Neo. I'm just watching what's going on my other monitor as well with the other instruments. So today, have a quick look at the dailies. We'll have a look at all the FX pairs in a minute, where we are with all of those. So obviously you can see the gap fill on the DAX there. With the dailies, we're still within this control candle on the DAX. So this is obviously where we gapped up. I am still expecting us to come down and complete this gap fill. We've had 4 days now range bound. We haven't gone anywhere. We're stuck in this gap. We tried to get out of it this morning. We gapped up into those highs and it's starting to reject. So I'm looking for a down day again on the DAX today. In fact, I'm going to get short. What's the opening range looking like? 400. I'm going to take a quick short now. Just assuming that we're going to continue this down move. So yeah, looking for continuation down move on the DAX. I broke even yesterday on yesterday's trading because it was a really choppy, difficult day actually yesterday. All the other instruments as well, all the other indices, we've had one rest day. We had another push up yesterday, another push up. So this is 6 days on the trot now on the S&P and pretty much 6 days on the trot on the NASDAQ. You can kind of class that as a green day. It's virtually a deadstone doji. So definitely looking for downs today. NASDAQ has just tapped straight into potential support resistance area, and it stopped dead there yesterday. So there's a lot of confluence for a move down. We're back up at the 72. It's all looking like it wants to be short at the moment. This is the level that is really going to be key for all markets, basically the S&P. Because S&P is the largest 500 stocks, so this is kind of the big boy of all the stock indices. We have put in new bullish market structure off of this double bottom. So whether we're going to stay in a bear market or a bull market is really going to be driven by the S&P, and it's pushing really hard to try and get new highs up here. But if it starts to fail here and we start to see it pushing back down again, this is what I would anticipate as being the sort of driver for the next leg. So I'm still bearish all indices purely on the fact that we've got decent downward movement, as you can see on the DAX, and it's struggling to get higher. All the other indices are starting to roll over and top out, and the S&P hasn't had a break for 6 days. So it's very unusual for any indice, especially the S&P, to have 6 up days on the trot. So looking for basically down days again today, and especially with the gap up on the DAX and this gap to fill on the DAX as well. So looking to trade this short as much as we can today. So we'll have a quick look at where we are. Dow's coming down very hard out the open. Should have shorted that. Never mind. Short on the DAX anyway. So there's our opening ranges. Quite big today. 500 point opening range. Or 50 point opening range. Pound US dollar still coming down nicely at the open. Morning, Stevie. Morning. Massive floods and continuous torrential rain here in Spain. No internet for the last few days, really? Blimey. That hasn't even been on the news over here. Floods and rain. Wow. Sorry to hear that. Not good having the internet taken out. Basically, if the internet goes down, it's like going into the dark ages, isn't it? Awful. I'm going to leave my my stop above the opening range high. This is 0.5% risk. Normally I would drag it down, but we've got a big opening range there. We haven't had a pullback on the pre-opening bell price action, so I'm suspecting we're probably going to look for some kind of pullback on this before we drive lower today. We'll see what happens with the other indices, but FTSE's coming down hard as well. Big drop on the FTSE. Nice big wick up. Okay, so we're getting that pullback starting now. if you're in any pound trades today, just obviously be careful of the budget. I don't think we're going to get a massive movement off the budget because it is all expected and factored in what's happening. But they may well use it for volatility. So if you've got any positions which were in profit by sort of 11, 12 o'clock this morning, UK, I'd maybe look to take some profit on them. Or at least lock it in just in case we get whipsawed out. The arse has fallen out of the yen. Sort of. It's we've had this kind of price action in the mornings during the Asian session for a few days, where we get this looks like it's starting to go price action, and then either London or New York push it up for another high. One day soon, this is going to actually hold and collapse. It's just obviously trying to time it is very, very, very difficult. The market cannot sustain these moves without some kind of profit-taking move coming in. This isn't all manipulation. This is a lot of this is speculative trades, and they will be taking profit. It's just at the moment there is so much driving it higher, driving everything higher against the yen. Nobody's got any reasons to take profit. There's nothing really that is really sparking a selling frenzy. There's no potential market structure breaks at all on any time frame higher than M15 at the moment. So it's just not happening. It's a crazy, crazy market on the yen at the minute. Sorry, you can hear my kids in the background. It's off to school time. Need everything done for them. Don't tell them I said that. Okay, so we're just pulling back. So if this is shorting today, this is a good place to start shorting from. So there's your 50% retracement in. 61.8 would be, and that's the opening range high basically, would be really where I'd expect us to go as the highest if we're going to continue down today. It has lost its safe haven status seemingly. Yeah, Peter, it's not a safe haven anymore, the yen. It seems to me weirdly that the Aussie and the New Zealand have taken over as the safe haven. When the war kicked off, the money all flew into the Aussies, which is weird. And the same with the Swiss franc. The Swiss franc has not had the manipulation. It usually does. So nice rejection showing on the DAX and the Dow for shorts. Yeah, it's bizarre at the moment. But this is the thing with this situation that we're in. The problem is everything has just been really badly timed, hasn't it? We've had 2 years of COVID chaos where the economies have all been absolutely decimated. The debt has gone through the roof, and then we've got rising energy prices worldwide, inflation going through the roof, and then the war kicks off, and energy supplies are disrupted at the time when energy prices are hitting its highest for 30 years. It's just, there's this massive culmination of everything coming together at once, which is just throwing everything into chaos. And it's very, very difficult to understand where to put money. And I think that's the problem at the moment. Because of that, we're seeing weird price action everywhere because nobody's really got a clue where the money is flowing. And I think a lot of the trades that have been taken by the funds at the moment are much shorter term than normal. And the stock market is obviously proving that. The collapse started before the war started and before the energy crisis started. There was fear in the market before Christmas. So doom and gloom times. But yeah, normal safe havens are not acting as safe havens at the moment. And the US dollar is very, very stagnant at the minute as well. Hence, shorter time frames. My broker also does not show the gap. What are the real market hours? So 7 a.m. So the DAX opens at 7. Well, basically, it's the Frankfurt exchange opens at 8 a.m. UK time. Yeah, trading on the DAX opens at 7 a.m. UK time. And then the London Exchange opens 8:30. Well, the London Exchange opens kind of 8 o'clock as well, really. But it's all anything you see. This is what I keep saying about these synthetic indices. Everybody keeps contacting me on Telegrams like, does it work on deriv.com? Does it work on Boom and Bust? Does it work on V75, V100, V225, all this? No, it will work, yeah, but you won't make money because your broker is manipulating that. It's like me saying, right, do you want to go long or short now, everybody? Pick a direction. You want to go long? Okay, that's brilliant. I'll take it short because I know your stop's down here. Right, you've just been stopped out. You've just gone short. You put your stop up there. Okay, I'll just take it up for a bit. That is what's happening on the synthetic indices, yeah? The brokers can see every single order placed in the market, every stop, every take profit. They have a system that says if you take price up here, you will make that much. If you take price down here, you will make that much. Where do you think the broker's going to take the price? Or adjust the spread. Yeah, anything you trade that's synthetic, i.e. not real, you're asking for trouble. Which is why a lot of people don't trade the Globex, what's called the Globex session in the S&P and the Nasdaq. So the Globex session is an algorithmic session created based on anticipated stock prices. So all this you're seeing here happening on the Dow is Globex. It's pre-1:30 when the New York opening bell goes, when proper trading starts on the exchanges. And this is not manipulated price, but it is an aggregated estimated price. And a lot of people don't trade it because you find it's very algorithmic to take out stops a lot of the time. But, there's a lot of speculation about all sorts of stuff in the Forex world. Unless you are a broker, it's all speculation. But you can see that this I mean, basically, if you take a line from yesterday, so if your broker's got a load of pre-market data in, take a line from there and draw it on your chart. So when the market closes, just draw a line on your chart and then look at it the next day at 7 a.m. on the DAX and see where you are in comparison to that line you drew from yesterday's close, which is basically exactly where my average is at the moment, just coincidentally. And when the market opens, if there's a gap, good fill. So it doesn't matter if your broker has all the pre-market stuff, but just be aware it's not futures fund trading. It's just sort of made up. You Google it. You'll see how it all works. But the other thing, obviously, to bear in mind is the volume. You can see the volume there. Actually, let me show you, easier to explain. Dow is falling out of bed. Hopefully we'll get the DAX starting to follow suit in a minute. Let me just draw a line on this chart. So this is the Dow on my other broker, basically. So this is obviously the open, and that's where I've drawn that line there. And this is where the market closed yesterday. There's the gap fill. Yeah. That's where it closed. Can't see that, can you? Because it's off the screen. Let me go like that. There you go, you can see it now. So that's where the market closed. There, and that's the gap fill, complete. That's the market open. The exchange open, I should say, not the market open. The market open is Frankfurt there. The exchange, where the futures contracts are traded, opens at 7 a.m. The guys on the floor open at 8 a.m. You see all of this here is an estimation of stock price, right? But you see the volume. And that's the important thing, the volume. Look at these gaps here. There's no volume in the market. Yeah, we gapped up. This is on a 5-minute chart because there was nobody trading there. Yeah, this is an estimation of price. So this is your broker moving the price that should be anticipated based on what the stocks are trading at before the market opens. Yeah, you see the volume that enters the market, right? All of a sudden, the exchange opens, the volume that's come in, and now the candles are solid candles with decent wicks rather than these tiny little gappy, jumpy candles. Yeah. So that's proper market open, proper volume going through the market. So that's the difference, and that's what you will find on these indices. Anything that's open, if you've got an indice like the synthetic indices, all these V volatility 75s, all this stuff that people trade on deriv, they're trading at the weekend. The market's shut, right? You cannot trade. If I wanted to tend to 20 million pounds of futures contracts at the weekend, I can't. It's shut. The doors are shut. They've got a big sign up saying closed. If you can trade it at the weekend, you're basically giving money to your broker. And that's why people like deriv give you a 200% deposit bonus, like the gambling establishments. Not real. Just be careful. So I'm just going a little bit of a rant about that because I've had 2 people overnight again saying about the VIX. I feel like I'm on a bit of a crusade because I used to trade options, binary options. I was one of those mugs that got suckered into binary options. Looked really good at the time. And basically, synthetic indices are the new binary options. They just look a lot more real. Was that a ship's horn? Hopefully it's not that flooded. Ships floating down the high street. So we've got big movement on the Dow still. Where are we going today? If we're going down. So we've got this accumulation here that we may well get stuck at. So this area of support resistance is a potential first hurdle on the Dow for a bounce. Failing that, likely coming back down to these gaps. So quite a long way to drop today in the London session. ADR still miles away, absolutely miles away. We're not really hitting ADRs on the indices at the moment. We're just struggling back down at low of the day on the DAX. So many corporations have taken advantage of cheap bank dollars. Much of the stock market is overvalued. The last 2 years have seen many new retail brokerage accounts open. Yeah, gamblers at large. Yeah. There's a lot. Stocks are very overvalued at the moment. Very overvalued. Which is why I think we should be looking for a down day. The whole market is overinflated at the moment. But there's more coming in. This is the thing. There's more buying coming into the stock market. Funds are starting to get a little bit more interested in sectors. And obviously that's producing more buying of stock, which is obviously driving the indices up. But the companies are very overvalued. This is why we saw in the earnings season, we saw a lot of the earnings coming out positive, and yet the market reacting negatively to the positive earnings, because even though they were saying, yeah, we've got more profit, the companies were already overvalued at the time they produced their positive earnings. So, which is what's driven this bear market. That and the fact that obviously the world's in a complete mess at the moment. FTSE's just finishing what looks like a nice pullback. We're struggling on the DAX to make new lows at the minute. Pullback's complete, but very, very wicky at the minute. We're still within the opening range. And we're now due a pullback on the other indices. Pound's coming down hard against the US. Euro's coming down. So we've got a fairly strong US dollar, which is probably propping this up a little at the moment. Yen's looking good. Bearish price action across the board. All yens. Wow. And a weak Swiss franc by the looks of things as well. Yeah, we got a weak Swiss franc. Swiss yen be a good one today. Potentially if we're going to continue with a weak Swiss franc for the day as well. Come on. I'm getting impatient for my percent. Is anybody here trading with my Forex funds, just out of interest? Let me know if you are. Right, this is stalling down here, so let's have a quick look at what's going on with the with everything else. So we've covered the weeklies. Monthlies, obviously, we know there's lots of stuff off the charts here. We're getting towards the end of the month anyway. We've only got a week left. So weeklies, we've got quite a few hits. So Swiss yen, unfortunately, obviously, you've missed it. Swiss yen was up at 120, 150 of its weekly range since Monday. So 2,500 points or 250 pips. So that's obviously starting to roll over very nicely. So that was that one there. The pound yen and the New Zealand dollar yen. So the New Zealand dollar yen, I've just taken a position on this morning. It's a trade, not a position. I've taken it with a stop. But I'm looking for short on that one. That's working out fairly nicely at the moment. And the pound yen. So those are your weeklies, which have hit their average weekly range is 150%. So those are all rolling over very nicely. Dan, you're with My Forex Funds. Are you funded or are you in evaluation at the moment? And if you're funded, have you withdrawn yet? I'm just doing an evaluation with them, basically. I'm doing an evaluation with a few at the moment. But the first leg is only 5 days, and the second leg is 5 days as well. And I've passed, well, I'm up to 4,600 profit in 2.5 days. And the target's only 4,000. So I've just got to trade for another couple of days. But yeah, just interesting because I don't know anybody that's traded with them. I've never traded with them. So, Diamond, I've been thinking about My Forex Funds, but won't go for it until the Forex markets return to some recognisable behaviour. Yeah, that is not a bad idea. We're just getting some wicks just spotted on my monitor on the Dow, on the DAX. Bit of rejection coming in down here, just keeping an eye on it. You went for instant funded. Right, okay. That's expensive. I was thinking about going for that, but I thought for $300, I might as well just go through the evaluation because it's only 10 days for both stages. It's only 5 days a stage, which is, be funded in 2 weeks anyway. So, and it cost me next to nothing. Well, I say next to $300, but $400. 300? Can't remember. Yeah, okay. No, I'd be interested to know if you withdraw and how it works with them. Right, sorry, I'm getting sidetracked. I'm just watching on my other monitor. I'm watching the indices and what's going on with them. I just saw that sort of tweezer bottoms going in on the DAX, but it does seem to still be coming down. So right, so let's look at the 4-hour RSIs. Doesn't need any introduction at the moment, does it? Yen, absolutely nuts moves on the yen. I got stopped out. I've got a CAD yen on at the moment, which is in 5 positions. I took an aggressive drawdown control position on Monday and got stopped out. I took another one yesterday and got stopped out. I've just taken another one this morning on the M5 reversal. No, sorry, on the M15. Yeah, retest. So when I woke up this morning, first thing I did was look at the chart and I got in here with a stop above the high. So it's in profit at the moment, but again, massively extended on all of these. So 4-hour CAD yen starting to roll over. Again, yesterday was the first real day where we saw some really good market structure breaks on M15 on the yen. So it looked like it was starting to power up, and we got a nice bearish candle this morning. So this could be it. I keep saying this every day, but it is very overdue a profit take move. All of these are. So Aussie dollar yen, same things happening on all of these, which are this. I mean, this just doesn't happen if you've been in the live room for any period of time for the last 2 years. We don't get 90-10 lit up. It doesn't happen. It happened in the war. Apart from that, it just doesn't happen. So these guys are super extended, all of these yens. And we're starting to see some really good, strong price action coming through, which is why I've taken New Zealand dollar yen short as well. It looks like it's starting to happen. So the potential on this is now for a complete correction on this. Probably a multi-leg, not an elevator shaft. Would be lovely if it did. But probably just a normal staggered correction. So bicycle, maybe an accumulation for a few days, and then start that sell cycle. So these are all really, really ripe at the moment. The other things we got extended, I'm only going to cover anything extended above 75.25. If it's below that, I'm not really interested at the moment. Aussie dollar CAD, we'll have a quick look at that one though. Reason being this. Yeah, we got very, very, very strong rejection. Triple top on that one. So that looks really nice, and it's starting to roll over. It's a little bit bullish this morning. We've got oil news this afternoon. Oil numbers are being released. So, but yeah, lovely triple top on that one. Aussie dollar Swiss. We've had a pullback on that. I'd be measuring that and looking for something similar, because we've got a very, very strong, as I said, at the moment, Aussie dollars and New Zealand dollars really, really getting a lot of money coming in. So I think probably a pullback and a push on that. We're not seeing anything happening on the Swissy of any decent strength. So continuation move to the upside on that. So if you're going to take this one short, don't look for much more than what we got previously on this one. So you're looking somewhere in the region of an ADR pullback. That's it. So maybe somewhere down, somewhere down here. Aussie dollar, US dollar, same thing. We got really nice rejection up the highs. We got tweezer tops on that one. So price action is looking like it's really ready to roll over. M15, we got the reversal alert really nice and tight this morning in Asia, which retested beautifully. Not gone anywhere so far in this session, but that looks good as well. We've got Swiss yen, obviously it's a yen, which Swissy's weak this morning as well. So that may well be a good one for this morning, if that's retesting at the minute. Didn't quite get there. Got rejected this morning. So we've just popped down into this accumulation. The problem with all of these at the moment is we've got these big, strong pushes and then accumulation periods. Every time we're getting into these accumulations at the moment, we're getting that next leg up. So as soon as we get one of those broken, like just think about it as higher level market structure, hourly. Yeah. As soon as we get one of these broken, we get the reversal alert on an hourly. That should be enough to start a decent move down. So we're just waiting for these to roll, get that first rollover to start the ball rolling. Euro odd, not looking for long opportunities personally. If you want to take it, take it. Personally, I'm not looking for longs on the euro. It's very, very weak with what's going on in Ukraine at the moment. Europe's going to be next on the list, and if that gets dragged into the war, we're going to be in trouble. Well, we're not. We're not in Europe anymore. But we're in Europe, but we're not in the euro. Never were. What am I talking about? Anyway, you know what I mean. Brexit. So big push down. I'd be looking for pullback and drops on that one rather than longs. Same with the euro pound. Got a decent move on the pound. A decent weakness on the pound off the back of CPI, which is why this one's pushing up. But again, I'll be looking for a push up and drop. And euro New Zealand, again, nothing particularly interesting for longs there. The pound Swiss, again, bias on the pound. I'm short. Lovely double top this morning on that one. And obviously the CPI figures kicked it down. Wasn't quite extended enough. Wasn't up at the 75 level. Otherwise, that would have been lovely. I'd have been in that. Pound US dollar and New Zealand dollar CAD not quite extended enough either. New Zealand dollar Swiss just starting to roll over at the highs as well. Again, these New Zealand dollars, I'm kind of biased long on this now. I'm not trading off the COT report at the moment, but the COT report is long. So all the Aussies and New Zealands, again, measure the pullback. Look for that. Same as the Aussie dollar, Swiss. Yeah, only trade one of these. They're the same thing. So pick one or the other. They're both doing the same thing. And New Zealand dollar, US dollar. again, same thing. This is the same as the Aussie dollar, US dollar. So looking really for longs. We're lacking in that US dollar strength at the moment, which is meaning obviously these are getting extra pushes against the US dollar. So all looking good on all of these yens at the moment. But as I say, these are the main issues at the moment. Trying to get some decent push on the yen. Obviously, yesterday we had some news coming out on the yen. Lots of talk about positives. They've put big plans financially in place to dig themselves out of the economic turmoil that they're in and the issues that they've had with COVID. So it's all looking positive for the yen moving forward. We're just waiting for the market to wake up and start that move. And as soon as it does, we will see, hopefully, a decent drop on it. But I was anticipating kind of the elevator shaft move where we tend to get a big 4-hour candle and then a little bit of a pullback and then that really big sharp move where it kind of undoes a week's worth in a day. But I feel that probably with the strength of this movement, we're probably going to see a nice orderly sell cycle start as the market just basically gets long on it. But like Peter said this morning, this is not acting as a safe haven currency anymore. We're not getting that fast injections of cash. We just got a big spike on the FTSE for some reason. Not quite sure what that was. Yeah, FTSE's making new highs. I'm just going to reduce my risk on this DAX trade. FTSE's just screamed off to the highs for some reason. And the DAX will tend to follow the FTSE. So I've got a feeling this is going to push a little bit. Really strong move on the... I haven't got the FTSE on here, but really strong move on the FTSE. So just cautious as to this one at the minute. We might well get a big spike on that. I'm not quite sure what's going on with the FTSE this morning, why it's pushing so hard. Seeing as the pound isn't. Anywho. Right. So yeah, that's the 4 hours done. Let's catch up on what you're saying. Went for instant funding. I'm in the evaluation for my Forex funds. That 85% too nice. Yeah. Good profit share. Don't use NinjaTrader anymore. Yeah, I do use NinjaTrader for my futures. I just haven't been trading futures in here. I haven't been trading futures much, to be honest. In the last week, I've been concentrating on CFDs, but I use Ninja for futures. You have to, because you can't use MT4. Looking at the COT report on the pound, shows deal is long, every other asset manager mostly short. Yeah, I wouldn't take too much... I wouldn't pay too much attention to the COT report at the moment. The thing with the COT report is the reason I use the COT report is it is your long-term barometer. It's this. It's the quarterly and monthly positioning in the futures market. At the moment, I'm not convinced that there is a lot of long-term positioning. Because I don't think the funds that are managing the pensions and the big investments, I don't think they are looking as long term as they used to be with what's going on at the moment, because the market can sort of shift on a dime at the moment. So I'm not paying as much attention to the COT report. So these moving averages I still am paying attention to, because the market reacts at them, but long-term bias is very difficult to judge, hence why I'm dropping down onto smaller time frames and trying to grab some percentage on the day on short-term moves at the moment, because I think it's very, very hard to gain a position on anything, because you've got to have a bias, and the biases are all over the place at the moment and shifting. How would we ever know that money wouldn't want to flow into the yen and the Swissy? It's just not happening. Why? Don't know. But the biases are not there, are they? So hard. I'm in pound yen short, doing nicely. Cool. Yeah, I'm in pound US dollar short, doing very nicely. Just about to get a reversal out on the 4 hour there. Watching these levels though, my TP is here, just above these highs. My TP's there. And I think I've locked in. Let me just check. No, I haven't. So locking in on that pound US dollar. I've only got one position on it. What I might do actually, 250. I might just trail that with 250, just in case we get a spike. That's where I would say is where we're likely to meet. If we're going to meet resistance today, support rather, previous day's high is likely where we're going to bounce. So we should be safe down to there before we get a bounce. But, we could get one of those. If we're going to get one of those, I'm going to milk it. Why not? In fact, let's go for 150, 175 roughly ADR move without any let up whatsoever. Sometimes the market will surprise you. May as well let it do it. Right. DAX. Still unsure on this one. The FTSE has just sort of stalled up at those highs, but a lot of wicks here. Don't like these wicks. There's so much buying happening. Sellers are just struggling at the minute. But we've got these high wicks here. So, it's chop. We're just sitting in opening range chop at the minute. Hasn't got any directional bias, so I'm just going to take a tiny loss on this one. If it continues to push. Seems dodgy for today's time frame, which changed by the hour. Yeah, it's all everything's changing by the hour at the moment. Stopped out on that one, 0.2. Right. 1 hours, haven't done yet. So at the moment on the 1 hours, we got pound yen. Oops, that was wrong. What did I get for? So we're just about to get a reversal alert on that. So yeah, you've missed it. It was extended this morning. Obviously the entry was going to be on 5 minute, but that was right at the beginning of the Asian session. Oh no, it wasn't. No, we just got it actually, just there. I thought there was an alert in the Asian session. No, there wasn't. So you just got the reverse alert on M5. So you would have got in round about there, which is where I assume whoever just said they got into the pound yen short. Infamous healer. That's probably where they got in. Apart from that, we've got nothing else extended. Again, I'm looking 80-20 75-25 be absolute bare minimum for an entry at the moment. 80-20 is ideal. At the moment, we've got some things getting extended, but not quite enough. So yeah, nothing else there. So that's your H4s and your H1s done. ADRs, still nothing hit there. But obviously we've got some weekly setups. So yeah, so that's it. Right, so what am I going to do with these markets today? We've got really no idea where we're going at the minute. If there's any other pairs you want me to look at and do any analysis on, let me know. New Zealand dollar yen's coming down nicely as well. I've got a short on that. See, when you moved your TP, would you have a trailing stop loss or taking partials? Trail. I don't like taking partials. I really don't. So I trail, basically. What I usually do is when I'm looking for to trail, I just look at price action. I look at the biggest candle I can see, yeah, and think, right, that is about 240 odd pips. So I'll stick a 250 pip trailer on. Yeah, because the market will do what the market wants, right? So if the market wants to do something like that, it'll do it. And who am I to stand in its way? If it wants to do that and do 125 today without stopping, why take a partial profit? Let the whole thing run. Maximize the profit. If it comes back up and takes me out, takes me out. But I'd rather not take half the position off and then have a tiny half position running as a runner to make me a load of money. I'm just basically I'm not in any hurry to bank small amounts. I'd rather just go for the big wins, really. It's the easiest way to make the money on small time frames, anyway. For GU and EU, I was waiting for a retracement to M15 before going short. Yeah, it's not giving you one, obviously, today. This is the trouble with trying to trade the euro at the moment. We're just pulling back up into the 50 area on the DAX. Just keeping an eye on price action there. With these euro pairs at the moment, it's quite difficult to get in a lot of the time because it's not giving you a decent pullback on anything. The pullbacks, this wasn't actually too bad yesterday. We had a nice pullback and push. But you've got to get in very, very quick on anything that is collapsing or pushing hard at the moment. And it's quite difficult to do because obviously when you get a tiny pullback like that, it doesn't look like it's far enough. But 38 retracements really at the moment is where I'd start to look for pullbacks, which is why I got in that DAX short as well. And because you're not getting much when something is free falling or is flying like the Aussies at the moment or the yens, everything against the yen, you don't get the pullback. You just don't get the opportunities to get in. So it's better to stick pending orders under lows at the moment and just wait to get gathered up. So when you see any kind of pullback like that, stop under there. And if it's going to continue on its crazy flying down drops, that's really all you get. Which is why the price action toolkit is so good. So I want to stop under the last low. There, bang, puts the order in, calculates it, puts your stop in, all done. So when you see that first pullback starting to go, just stick a sell stop under the last candle. And if this keeps pushing up, keep adding sell stops, cancel that pending off, add a new one. And eventually, you'll get one of these candles, bang, that will gather you up into the position before it starts to go. So it's the easiest way to get in. For me at the moment, just because the markets are moving so fast. Franco, I can't do Zarjap. It's the same as the rest. It's coming down at some point very, very soon. And it will come down faster because the South African moves quick. Diamond, pound Aussie, crying. Why are you crying? What's wrong? Don't be sad. You're long on it, aren't you? Yeah. Right now, you are exactly at the point of no return. 177,280. Yeah, that wick. In fact, it's not actually that. I'm a little bit out on that line, aren't I? $177,311. If you're going to get into an aggressive position, this is it. You have a 7 pip stop. All in. I'd wait for a candle. Don't get all in. That's not a good thing to do. Wait for a bull candle. Tricky, very tricky, that one. The pound is very, very hard at the minute. I'm long bias on it, but it's coming down, so it's very difficult to actually judge that one at the moment. Pound Aussie. Oh yeah, just done that one. So yeah, pound Aussie. At the moment, obviously, we've had the CPI figures come out, which has sent the pound down this morning. I looked at this one yesterday. We got that market structure, higher low put in. Then we got the higher high put in. Then we came down and put a lower low in. And then we've accumulated. And as I said yesterday, this is going to go one way or the other. I would expect it to go up on the budget. But obviously this morning on the CPI figures, it just started. I mean, this is not a news spike. This is just grinding down. The pound is just being ground into the floor at the moment. I've got a feeling the market is not happy with what Richie Sunak is going to be saying in the budget today. And it's just not happy about the pound. So really all you can do is ride it until we get some bullish pullback like that, which we will get. But it hasn't recovered. I was expecting the pound to recover from this war drop, and we didn't get the bounce. It looked like the bounce was starting, and then it just kind of is like a spluttering car. It's faltering. It's just failing. Didn't even get back to the 24. And I likened this yesterday to the euro. If you look at the euro odd, the euro made a recovery back to the moving average. We didn't get that on the pound, so the pound's just been just one of those things, isn't it? At the moment, no one can tell you what the hell's going on with any currency. It's just the market is in its own world, and we're being driven by different forces at the moment. So anything you see in hindsight is kind of not happening. But yeah, bias obviously on the pound is short now. For me anyway. So I'm looking to short it along with the euro. But we will get a pullback. You will get a pullback on it. Yeah, don't forget, this is the FX market. This is all still speculative. There's a lot of speculative money in here. And the speculative money has to take profit. But at the moment, the profit take was that. So whether we're going to get a leg up or a leg down next, we don't know. We've got to wait for the market to make a decision. And at the moment, it hasn't made a decision either way on the pounds. We're stuck in an accumulation all week. The fact that we're coming down here, though, is also, you can take this as a positive. Everybody saw the collapse. Everybody saw the recovery starting. Everybody's liquidity got put under the lows. The market pushed up, it pulled back, it made a higher low. It started to push. What did everybody do? Either put their liquidity there or there. The market pushed up, came back down, double bottomed, started to push. What did everybody do when they saw the double bottom hit? Put their liquidity there and here. What's the market doing now? Taking everybody out in the last 2 weeks that entered a long position. What do they do after they've done a stop hunt? Yeah, so I mean, there is a positive speculative move long there. A short one on the DAX. It's starting to roll over. So yeah, there is that saving grace there, that this could just be a liquidity run. We could just see a complete reversal of this with a bullish engulfing when the budget comes out, and then we fly. I don't know. You just have to deal with what you've got at the minute, unfortunately, which is, I know, very tough. I'm struggling with the yens. So hopefully what we'll get is a massive yen strength, a massive pound strength, and then we'll all drink champagne. And hopefully it all happens this week. That would be lovely, wouldn't it? Please stay away from the funded trader. They have just changed my account from Nash Markets to Purple. Oh, Purple Trading's awful. Yeah, no, they're terrible. Purple Trading. I used to have an account with Purple Trading. They were shocking. I think it was FTMO used to trade with Purple Trading. They stopped very quickly. Yeah. 4.5 ADR from break even. Yeah, yeah. So that's 400 odd. No, 600. That is your resistance. Yeah, so if this is a liquidity run, that's your resistance. Yeah, we didn't have one up candle that we haven't taken out yet. By the time price gets up to there, 72 will be coming down on top. So if we're going to continue with a bear market on the pound, that is not unachievable. With aggressive drawdown control, when you see some bullish price action, you could easily get out before that high. But I think your goal on this one has got to be getting out, not getting profitable on it, obviously. So just taking second position on DAX. Hate scalping, can't wait for the drama to end somehow. Yeah, me too. I don't like scalping. I hate it. It's hard work. It's very hard work. But at the moment, needs must. Position trading is just very difficult. It's doable, but it's just very, 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 very difficult because you haven't got a bias. It's hard to trade without a bias. Yeah, we're taking positions long term, thinking that the market is going to go in a direction. At the moment, I haven't got a clue which long-term direction anything is going in because there's too much uncertainty. We've got COVID rates spiking through the roof in the UK. Where I live is one of the highest in the UK at the moment. 1 in 10 people got COVID. It's nuts. What's going to happen next? You know, what if we get another rate? I've just seen the inflation for Germany come up. Rates. They're forecasting 6.1. That's not going to be good. Yeah, I mean, there's lots and lots and lots of things affecting the market at the moment. So you've just got to adapt. If you want to make money out of the markets, you've got to change with the markets. And the markets have definitely changed over the last few months. I took that few weeks break from position trading. I'm glad I did, but at the moment, still not in a good position. So scalping at the moment is a necessity. Hence me just going for a couple of funded accounts to try and get a little bit of extra money to trade with, because I find it very hard to make consistently make 10 to 15% a month scalping, because it drives you. It's the psychology part, and this is kind of what I cover in the course a little bit as well, about the choosing your time frame. Some people are geared up for this, and M5, M1 is they try it, they do it, and they go, this is it, this is me. For me, I could do it, but I didn't like it, I didn't enjoy it. And it's like any job, if you don't enjoy it, you won't want to do it, and it can really send you tilt. Yesterday I came out, I think it's just $7 in profit yesterday. I was up 0.7, I've got it written down on my pad here, 0.7%, went down to 0.2%, went back up, went down to negative 0.5, and I pulled it back to break even, because I'm targeting 0.5% to 1% per position. So I basically came out yesterday with a break even. I worked all day yesterday and came out with $7 in my pocket. It's just, it can drive you absolutely mad, scalping. Whereas position trading, it's all, you're just waiting for the market to move you into money, because the market does that normally, which is why it works so well for most people's psychology. But when the market decides, actually, we're not going to do what we usually do, you have to just adapt. This is the problem. But we're in a very, very, very different time at the moment. We've not been in this sort of chaos from a financial debt perspective, from an energy crisis perspective, from a conflict perspective, and from a pandemic perspective. We've had 4 things hit us in 2 years, which we haven't had for decades. It's just absolutely crazy. You just got to milk what you can in the way that you can. Morning, just got home. Did you do NAS yet? Yeah, I did cover it. But all indices looking for shorts today. We've had 5 or 6 days solid up on the NAS and the S&P. So I'm looking for a breather. Market's got to breathe. Yeah, it's overvalued, very overvalued. Everything's overvalued, and NAS specifically is sitting at the 272. We had a little bit of a pullback day before last, but today I'm looking for, again, a big bearish move. Just breathe. Just needs to breathe. Yeah. This is bull market movement. We're not in a bull market, we're in a bear market. So this should be a pullback. So obviously in the bull market, we can get big runs. In a bear market, we don't tend to, this is obviously the start of the collapse, but we don't tend to get 5-6 days up, as you can see. It doesn't happen. And in the same way as we don't get 5 or 6 days down in a bull market. So either this is a correction of the initial move as a whole, which in that case I wouldn't expect us to get above the 50. Certainly wouldn't want to be breaking these levels. This is kind of where I'm expecting us to get the bounce. But yeah. And obviously next leg, if we're staying in a bear market. So, but yeah, very extended, overpriced. Everything's overpriced at the minute across everything. S&P, same thing. Yeah. The DAX is in an absolute mess. Look at the DAX. We've got gaps all over the place. But specifically, That one, 14,000. We gapped. We hit 14,000. Rejected it. Tapped into it. Gapped above it. Haven't looked back. Need to come back and retest this level. And we're stuck in this control candle on the DAX. So expected to break out of these lows. But, at the moment, like I say, who knows what the hell's going on? The market's just in a total mess. All markets are in a total mess. FX, everything. Oil and gold. So gold we were looking at for longs from here. Just nothing. No direction. Just not interested. Looked like it was long. And it's just sort of flagging at the minute. Oil. We got the bounce on oil, which is where I was expecting it to happen. But, I was expecting it to happen down here. But I got in, got stopped out, and then it obviously rocketed. But again, at the moment, we should be bullish on it, but we're looking up, we're rejecting. It's all a bit of a mess. Stress, yes, it is a stressful time to be a trader. Which is why I'm using other people's money at the moment. Dan, I've been scalping and closing 50% at 1R to help with the psychology. Too many trades have backfired recently. Yeah, the problem with that, and like I was saying about taking partials, is it's very important when you're scalping to have a positive risk reward. Yeah. So I'm risking 0.5%. I want to bank 1%. If I'm risking 1%, I want to bank 2% or 1.5%. So a minimum, you need a minimum of 1.5 R if you're scalping. The problem with taking a partial is when you take that partial off, you're only taking 50% of the profit, and then you're getting stopped out. 90% of the time, you'll probably back me up on this, but you're getting stopped out on the other 50%. So what you're actually doing is you're reducing yourself to a 0.75 to 1 R, which is not sustainable long term. Which is why I don't take partials. I would rather be, I'm in two positions with 1% risk. I would rather be stopped out on that and stopped out on that than take this off at 0.5% and bank 0.25% on 0.5%'s risk. There's no point, because if the second position comes back, I'm going to make a loss, aren't I? The better thing to do is to hit the break-even average button, yeah, when you get a profitable trade, and either get out with nothing or let that thing go. Let that thing make you money. Or wait for it to hit your target, get to your target, wherever that target may be, then put it to break even and see if you can get a runner for a 3, 4, 5, 6 to 1. Like I did on Monday. I banked 6% on Monday on NAS or S&P, can't remember which one it was, but basically I moved it to break even, and then Powell started talking, market dumped 2%, I took it. It's a much better way to do it, trust me. Adding into your positions. Scalping is completely opposite to position trading. In position trading, we're averaging in ready for a move. In scalping, when the move is in our favor, we add into the move to make sure that we maximize on the amount of money, because it's hard as a scalper. As a scalper, your strike rate is going to be somewhere between 30 to 50%. Mine's 45. I think it's 45. 46.67. Okay, to be exact, is my strike rate. So when I get a position that goes my way like it is at the moment, I'm going to add to it because I'm right. I'm going to break these lows. So adding to the positions means that when I get down to here, instead of making 1%, I'm going to make 2%. When I'm wrong, I'm going to lose 0.5%. It's very hard as a scalper to get a strike rate of anything over 50. Why, for me anyway. I mean, for most people, I think. But so partial profit taking is literally just cutting your reward in half. Unless you don't get stopped out, obviously, on the second half of the trade. But in my experience, you know how the market moves. The reason why do you think the market moves this way? Yeah, because it knows that as the market moves down, people enter positions. The market comes back to those entries, and people go, "Oh, getting out. Phew, that was close," and then it goes your way. Yeah, if I got in here, took a partial, moved to break even, all I'm going to do is give back half of my trade. Because that's what the market does. That's the way the market moves, isn't it? Yeah. So whenever you move to break even, 9 times out of 10, you're going to get a pullback. You're expecting the pullback. What you should be doing is leaving your stop where it was, waiting for the pullback, and then adding another position to it. But that's hard to do. The woman asked me today, the woman, is that your dear wife? The woman asked me today, how are we Forexing? I said up 12% for the month. She said that's all. Ambulance woman, your ride is here. Yeah. My wife keeps asking me that as well. You've been very quiet recently. You haven't been saying how much you've been making. It's like, a new delivery arrives from Sweaty Betty or wherever she's been shopping. Yes, hard. But this is real life. This isn't the Lamborghini video that you see advertised on Facebook. Pound US dollar's pulling back. Not quite got the reversal alert on that yet. See here, basically, I mean, I haven't... 14 down. So I haven't really made or lost anything today. So if I close 0.6% here, I'm going to close it. I don't like it. We're back down at the rejection point again. So I'm banking 0.6. If you hear me scribbling away, I'm keeping a journal basically on my pad because it's easier than anything else just to write down what you're doing. But banking 0.6 off those two positions because I'm seeing rejection again down here. May or may not be, but at the moment the way this market is and these movements and this accumulation we seem to be going through at the moment, I'd rather have 0.6% in the bank. It's very, very hard to squeeze money at the minute. So we've got potential W forming for new highs. Pound US dollar, not stopped out on that one yet. So still got that running, trailing. So we have just made new lows. New Zealand dollar yen, I've got running. A high percentage of my trades seem to hit 1R, so my logic was taking 50% at 1R makes it break even. Yeah, but if you're a break even trader, you're not making money. there's good logic in that, and it works, but it's very hard to make money, and it's not a bad thing what you're doing that, because it protects your risk, protects your capital, and that's your job. Your job is to put risk on the table and manage that risk. The problem with that is the psychological part of it, because what you will see is an awful lot of break-even trades, and break-even trades drive you crazy psychologically. Our psyche as human beings is to avoid pain and risk, and make our lives easy. We don't want, 90% of people do not want conflict. You do not want risk. You do not want pain. So moving things to break even releases the world off of your shoulders, and you go, I can breathe. I have now got no risk on the table. Brilliant. Depression. So every trade that closes is a negative. Every break-even trade you take is as bad as a loser, which is psychologically, when you stop taking those break-even trades, you stop taking losers. You don't know you're taking losers, but you are. Every time you take a break-even trade, you take a loss because you haven't won. You want to win, and you want to stop pain. Break-even is pain because it's not a win. Whereas I'd rather take 0.6 than take a break-even. Just because psychologically now I'm up for the day. I'm winning. So I'm relaxed. I'm much more relaxed because I've got 0.5% in the bank. Does that make sense? Target 3 to 6R on the remaining 50%. Yeah. So I mean that's right. So what you're doing by targeting 3R on the other 50% is you're giving yourself a 1.5 to 3R trade on the other half, which is fine. But the problem you will find again is look at that trade I just took there. So my stop was somewhere up here. Yeah. So 500 or 400 points, right? So for me to that trade that I took there, where I took, this is a good maths lesson. I just took 267 pips out the market off of a 400 pip stop. So my risk reward was negative on it, but I had two positions on, which gave me a positive risk reward. So I'm a 1-to-1 on that, aren't I? I took 0.6% and I had 0.5% risk on my initial position, 1% risk on both of those. For me to get a 6R on that trade, I've got to have 4, 8, 12, 2,600 pips movement in my direction. Yeah. So for you to get a 6R on the other half of your trade, you've got to ride it down to there. Do you think the market's going to give that to you? Maybe, maybe not. What do you think the odds are of it giving you that 1R or giving you 6R? Big difference. So if you can target 1.5R, which is for me there, that's achievable. Easy. It's not even looking for a new low on the pre-market session. But for me to get a 6R, I've got to get nearly a whole ADR move. I've got to rely on the market putting in a candle like that. Hard. Very hard. And this is the thing people struggle with, and I struggled with it for a long time as well. It's all very well going for those 3-to-1, 4-to-1, 5-to-1 risk reward trades. How often do they happen? How often can you get a point like me there? Yeah. How often can you get a 0.75R out the market within 2 to 3 candles? Pretty much every time. How often can I get a 6-to-1? Maybe 1 or 2 times a week the market might give me enough movement to actually achieve that. So what you're doing is you're taking 0.5%, you're taking half a profit, losing the other half, because the chances are the odds of your 6-to-1 trade working out are probably 5 to 10%, whereas the odds of my trades at 0.75 to 1 or 1-to-1 risk reward are about 70 to 80%. Big difference in odds of actually achieving your goal. Don't forget, you cannot force the market to move. The market will move where the market moves. Our job is to extract money out of the market when it does those movements. And if your target is easy to achieve, you will achieve it regularly. If your target is difficult to achieve, you won't. Think of it like an archer, right? If I've got a target which is 1 meter away, I'm going to hit it virtually every time. If I've got a target that's 50 meters away, I'm not. I'm going to have to be really, really good with my entries. And I'm going to have to be really good at holding. What are the two things we're really bad at as traders? Picking our entries and holding our positions. That's what you want to aim for. In, out, thank you, done. See, I shouldn't have got out of that position. It's tanking. But am I bothered? No, I've got 0.6% in the bank. Look for a new trade. It's a difficult thing. And, I was a break-even trader for a long time. And the reason I was a break-even trader was because I was moving my stops to break-even. Because the market, when you understand fully market structure, what happens in a trend, you realize that every time you get in, you're never going to get in there at the start. You're going to get in somewhere along the road. So when you get in and the market moves against you, it's going to come back, and it's going to come back to your entry. Yeah, I'm not going to get that. I'm going to get in here. The market's going to come back to my entry. Yeah, we never get in. I got in here. I didn't get in here. I got in here. Where's the market going to do? It's going to come back to my entry. Always comes back and stops you out at break even. It's a horrible thing, the market. But when you realize that, and the way you realize that is by journaling your trades. And when you look at your journal and go, all of my partial profits were hit. And I hit my partial profit 70% of the time. 95% of my break-evens got taken out. Therefore, if instead of taking a partial, I took a whole profit, would I be a profitable trader? Bang, and suddenly a light bulb come on. Did for me anyway. But what was that about cutting your winners short? Yeah, cutting your that's the other thing you do. Cut your winners short. I do that all the time. I cut my winners short, but the thing is, they're winners. That's the difference. I don't mind cutting a winner short if it's a winner. And it's about strike rate. You know, I got a positive. The reason I cut that short was because I had a positive risk reward on it. Yeah. My initial entry was 0.5%. I got out at 0.6. It's not good, is it? It's just 1.1 to 1 R. But I'd rather cut it short with a 1R and put some money in the bank and be right 3 times. If I can get 3 good trades in a day, I'm done. 1.5%. I'm more than happy. Like the Pirates motto, take what you can, give nothing back. Yeah. Yeah, you take what you market will give you. You take what the market gives you. Market's about to stop me out on my pound US dollar. That's all it's going to give me because of but it's going to give me that because of what I'm doing. I'm trailing this stop. And I know every time I put a trailer on, it's going to get taken out. I know it is. And that's why I put it on there, because I want to be taken out of the market. And why do I want to be taken out of the market? So I don't have to sit through the pain of watching this potentially come back and hit me there. I'd rather just go, oh, well, I only made $300. I could have made, if I hadn't have put this stop on, I could have made $1,500. If I put that to there, I'm pretty confident we'll get down to there today because we've got the budget. If I put it to there, likelihood is it will come and take me out and then it will go down to there. If I leave the stop where it is, I'm putting 0.5% risk on the table. But what you do as a trader is dependent on how your day, month, week is going. It's just been taken out. My week on that at the moment is sitting at $4,800 in profit. That's why I'm putting a trailing stop on it. If I was at break even this week, I'd be holding that position. And again, that's what I talk about in the course. Your risk tolerance, your drawdown tolerance, your pain levels are all different. And those are based on how your day, week, month, hour is going. Right now, I took that off because I want to get some money in the bank. I've got all day. We've got another session to go this afternoon. So I'm not in any rush. I'd rather just make sure that when I get the money on the table, I've got it in my bank. If I was having a bad day, I would probably have moved stops to break even on it. Because I want to give the market an opportunity to pay me. But at the moment, you know, and that's the difference between a good trader and a bad trader. I'm not an amazing trader. I know I'm not an amazing trader. I just know how to extract some money. That's all. Some people have got balls of steel and will hold these positions all day. And occasionally I do. But again, it depends on how relaxed I am as a trader. It's all about psychology, the whole thing. People go on about it all the time. And there's not one book out there that teaches you that bit, unfortunately. You just have to live through it. Closed my GJ position, made 2.5%, risking 0.75. Happy with that, done for the day. Good job. Franco, I know it's dangerous. Been trading last few weeks with no stop loss or no TP. Keep checking every few hours, keeping me from being manipulated that much. Just deal with what's on the screen chart. Yeah. Exactly. Yeah, I'm forced to have tight stops, hence waiting for decent retracements. Yeah, I mean, it's all about the getting in. The getting in part is the bit that we can't do. You know, we can't timing our entries is the most difficult thing to do, which is why, as a position trader, it doesn't matter. Your entry timing is much less relevant, which is lovely. As a scalper, your entry is incredibly important, and it's got to be fairly quick, which is why you need to work on price action. When the market starts to look bearish, you need to get in, because it can go like that in 20 minutes. You've missed it. You've got to be in fast. You've got to be out fast as well, because the market can also do that just as quick. We get a V-shaped recovery in now, and you didn't take your profit there, you're stuffed. In and out, quick, small percentages, regularly. Took a long time to learn how to ride the roller coaster. Yeah. It does. The problem people have as traders when they start out is they don't even know the roller coaster exists. It took me a long time to figure that out. When I started looking at price action at support and resistance, that is when market structure really became obvious. It was like, wow, it stopped there. Wow, it stopped there again. And then you see, oh, it didn't stop there at all. Oh, support and resistance is rubbish. It doesn't work. It's not about working every time. It's about working sometimes. The other times you get stopped out. Doesn't matter, does it? As long as the ones you get that work, you make more out of the ones that you get stopped out on. That's it. That's the game. And I really wish I'd have held that DAX. I have got a FTSE trade on short though, so that's in profit. You in a DAX short? No, I'm not at the moment. I should have been. I was in a DAX short. I was in a DAX short there. I got out. Got spooked. That was my trades. Took one there. Got out there. Got spooked by this wick. Yeah. For good reason, you know. I didn't. That wasn't a mistake. That was a legitimate. Don't like the look of this. We're rejecting here, but it tanked. So if I'd have been making a cup of tea then downstairs, I'd still be in the trade. How weird is that? Don't look at your charts, you make more money. And I've proven that fact myself. I used to trade H4 on price action. Used to trade H4 price action using these moving averages. Yeah. And what I would do is open the charts every 4 hours. When we got into here, I would take a short, put a stop, and I would shut my charts, walk away. I'd come back 4 hours later to a candle like that, and I'd be like, woohoo! If I'd have been watching that candle on M15, I'd have seen that. Yeah. How many times would I have been scared out of that on M15? On H4, all I saw was one candle. Go up a time frame. Enter your position down here. Monitor it up there. And do not take a trade off until you get a break above the previous candle's high. Change your life. Dan, I've only been trading this way recently, but passed a couple of FTMO free trials with it. Cool. May's too hot. I got in at 14,479. 14,479 down here. Yeah, break of the low. So that's the opening range low break. Oh, no, it's not, sorry. That's the opening range. Yeah, so that would be the opening range low break, basically, yeah. Obviously, be prepared for some drawdown. I'm in a FTSE short at 75.12. Dow's rejecting down here. So what I think I'm going to do today, looking at obviously where we are with the DAX at the moment, we are starting bearish, and just take that fib off. Leave that one on. Aussie dollar Swiss moving. So basically, we've rejected the highs on the DAX. We've still got the gap fill here. So the 14,000 is my overall target. So I'm going to put some fairly wide stop positions on today on pullbacks, looking for this kind of price action today. Yeah. Which is what I've been looking for the last few days, but we've kind of started it, but not got it, have we? So so we've started off bearish. So I'm going to be looking for pullbacks and looking for shorts. So looking for it to pull back into like previous up candle like that. So looking for it to pull back into that area for another short. But I'm going to keep very nice wide stops on all the positions today, and I'm going to try and build a position short, or probably just scalp. Keep scalping short with decent stops. So looking probably around about 600 point stops and maybe 800 point TPs, and just basically getting to positions short, looking for that big drop. 14,000 is the overall target, which is miles away. Yeah, that's ADR, lower than ADR today. It's what, about 130, 140 ADR. Yeah, probably about 130% of ADR today. But obviously it's not going to do that in one session. It's probably going to take a few sessions to get down there. At the moment, though, it's collapsing. Why is it always when I get out, it does that? FTSE's doing decent, though. Got a nice little profit building in that one. It's coming down nicely. Who was it? Sorry, I had a question for somebody who is in my Forex funds. Are you still in here? Why can't I scroll up on the chat? Oh, yeah, there I can. It was Dan, wasn't it? Yeah. Does my Forex funds, if you know, work in the same way as all the others? So you've got 5 days or 10 days minimum, whichever prop firm you're using, to hit your target. If you hit target on day one, can you literally just enter with a 0.01 on 4 of those days and pass? Or do they get arsey about that? Because I'm $1,000 over target. And I'm trading normally. I'm still trading normally. But what I'm obviously trying to do is show them that I can do it properly, rather than saying I've hit 4,000 in one day and now I'm going to take 0.1s and just take one trade a day. I don't know how fussy they are about that. I know with FTMO, if you have a 10k target and you put one massive contract in, hit 10k, and then just take a 0.01 for 9 days, they'll pass you and give you funding, which is utterly crazy because obviously it was a complete fluke. But I don't know if my Forex funds are more strict or not. So if anybody knows, I'd be interested to find out. Obviously, because I've way surpassed the target, but I don't want to screw it by having a bad couple of days and dropping below the target. I've only got a trade today, tomorrow and Friday, and I'm done. So happy to say your approach to trading psychology is similar to mine. Refreshing. For a while I thought something was wrong with me, but I'm winning. Franco, if you have, obviously we know the stats, 95% of people lose money. I suspect it's more like 98. Yeah. If you're doing things completely the opposite to these guys, you're winning. Keep doing it. That's the way you make money, by doing what the other guys aren't. I liken it to the popular kids at school. If you wanted to be a popular kid at school, you never got anywhere. The popular kids at school are not the ones at the moment that are making a fortune. The geeks that got picked on at school are the ones making all the money. Facebook, Tesla, all geeks. Virgin, all geeks. Another leg down on GA and just took me out and attempted long and it erased my profit from the DAX trade. It's a break even. Yeah, it's still going. Yeah, this Australian dollar is way, way, way stronger. It's the Aussie and New Zealand again. It's the Aussie and New Zealand. If you look at all the other pound pairs, they're all pulling back. Aussie and New Zealand are not. The Aussie and the New Zealand dollar are just, these are the new safe havens, and this is how we're discovering this. There's so much money coming into these currencies at the moment. Unbelievable amount of buying on the Australasian currencies. And the European currencies, nobody's interested at all. And obviously US dollar as well. We've got the same thing with the US dollar. Just no real interest in it. It's just not, it's not getting that spike, obviously against the yen, yes, but it's just no power. Bizarre. Well, that's completely fallen out of bed, isn't it? So I'm going to try and get in on a pullback on this move somehow. This is going to be a tricky one to try and get back into today. So looking at these lows basically for an entry. Keep stop above opening range high. Might try and get in on some inventory retracement bars, some IRBs. So any pullbacks, just basically as we start pullbacks, sell stops under the lows, and as we pull back and pull back and pull back, keep adding sell stops until they start the next leg, and then obviously you'll just get gathered up into the position. I'm not putting it there because it's way too extended. But that's the plan. Might close out my FTSE, close out that FTSE position. Not that anybody's on it because I didn't show it, but another leg down. I did not do the evaluation. Oh yeah, of course. Straight for funding, yeah. The pound is not happy, no. Surely the CPI data should lead to higher interest rates and stronger pound. Like I said, Peter, before, I don't really understand personally why the pound is so weak at the moment. So I just changed the time frame on that. I don't understand why we're quite as weak as we are on this pound. The war affected it way more than I was expecting. I think, I don't know, because I'm not an economist, but I think this is to do with the banking sector and the Russian money. Obviously, we are well known for having all the oligarchs in the UK, all living in Chelsea, lots and lots and lots and lots of Russian money in our economy. We are also the largest transactional player in the foreign exchange markets. So over 50% of all foreign exchange transactions come through London. We've stopped the SWIFT banking system to Russia. So I think this is a combination of Russian money escaping and the financial processing system being changed. China's version of SWIFT took a massive uptick when the conflict started. So I think this is just a combination of those two things is devaluing the pound. I don't think inflation and interest rates and things are causing this. But we should see an uptick. But when is very, very difficult to tell at the minute. So yeah, it's a hard one. The pound. Average monthly range, there you go, pound odd. We just hit 150% of our average monthly range. We've got a week to go. We're 150% extended. Aussie dollar Swiss, again, it's the Aussie dollar. This is being caused by the Aussie dollar as well. We got this. This is just unfortunately this pound odd and pound New Zealand are the perfect storm at the moment. Massive influx into the Australasian currencies, massive drops on the European currencies, and the combination of these two obviously makes these the most volatile movers. Jesus, this thing's just not letting you get in, is it? I'm crying inside. Badly. DAX 30-minute. Got no top wick. Anyway, riding it back up. I wouldn't ride that back up. Think of it like standing in front of a steam train or catching a falling knife. You'll get cut to bits trying to long this. At some point, you're going to get a bullish candle like I did there. Yeah. And you're going to get in and it's going to stop you out. It's going to, at some point, it's going to ride back up. Yeah, it's going to do a pullback at some point, but timing it is very difficult. I want to get in on a pullback short, but I can't get in at the moment. Can't find an entry. So yeah, I'm basically looking for shorts. So I was just thinking. God, the silence there, the tumbleweed flying through my head. Then, did you hear that? I was just thinking very hardly. Hardly, that's not even a word. Of where I'm looking for a bounce on this. I'd have to say there is probably the zone I'd be looking at. For a bounce, the double bottom. So if you're going to long it, we're getting there, but it's I'd say it's pretty high risk long, and you want to be out at the 38 retracement, and you've got other potential areas where we're going to bounce up into as well. Difficult today. I had the right trade, I just got scared out by these wicks, unfortunately. So, I mean, buy stop above the highs, basically. If you want to get in long, you want to be entering buy stops, obviously, and buy stops above the last candles and highs. So, couple of buy stops, and then get gathered up in. And if you get down into here, you can enter a sell position here while it's coming down. Obviously, that's a risky one, but it will be very high reward. Starting to show a little bit of rejection down there. Or the other alternative, obviously, is to drop down onto M1 and try and catch it. Literally, we've got two, look at that. We've got 1 bar and 2 bar pullbacks. That's all we're getting. Yeah, we're on a 2 bar pullback now. This is potentially another short. But that's what you want to be playing. I would say if you want to get in long, 1 minute. But obviously 1 minute's tricky. Dow's on the move, is it? Yeah, it's always... I can't get in. I can't get into this. Waiting for pullbacks. Anyway, that's what I'm going to do. So yeah, if you want to fade it, obviously you need to pick a point to fade. I would wait. What I would wait for, if I'm going to fade this, I would wait for a small candle, yeah, so that I can get a stop above the high, an entry above the high that is not too far away from price, because I've got a feeling when we get this pullback, we're probably going to get 2 or 3 candles maybe out of it, and then it's going to go again. So there's not a lot of room to get in. So I'd wait for a small candle like that, and just before that candle closes, buy stop above the high like that, and then next candle we'll probably see a fairly decent bull candle, and get in that way. That's really all I'd do if you want to fade this back up, but I'd rather fade it back up. I'd rather wait for it to get back up and then drop it from the 2050 area back down. That would be perfect. If we can get up to there, 50% retracement back up into the opening range low, that would be absolutely spot on for me to short. I'm not sure, by looking just by the power of this move today, I'm not sure we're going to get a pullback up to there, but it's worth a try. Just got to plan it, execute it, see if it works. That's the job. I mentioned shadow soldiers before. 1 cent a pip helps me a great deal. I make decision. If my direction is right, I jump in heavy. If wrong, costs nothing to flip positions. Yeah, take a tiny one. So just get in with a little one. The trouble is, if you start getting, for me, that doesn't work, because if I get in with little ones and it works, that again, I talk about a lot in the course about positions that make you cross. If I get into a trade with a 1/10 or a quarter of my normal lot size and it works brilliantly, that makes me angry, because my conviction should be on that trade. I'm getting into this trade because I think this is happening. If I get in with a tiny position on that trade and it works, it makes me more cross than if I hadn't got into the position in the first place, or if I got stopped out. Because what I've basically done is got a fantastic trade and I should be cheering and shouting, but I've made no money out of it. And if I'm going to take a tiny little position and then I'm going to add a bigger position up there, what I'm doing is, when the trade goes my way, I'm adding a larger position just before the pullback starts. Therefore, I just go into drawdown. It just doesn't work for me. I can't do it. But if it works for you, obviously do it. Whatever works for you, works for you. We're all different. For me, trailing sell stops up at full size is probably the best thing to do for me today. But yeah, if it works, it works. Do what works for you. Can't stress that enough. Find the indicators that work for you. Find the strategies that work for you. Whatever they may be, you've got to find them. No one's going to be able to tell you what they are. You've got to try it all. When you try it and you find it and it works, that's yours. Bullish engulfing forming. So we are starting bullish now. Conviction is a hard luxury these days. Yeah, conviction is difficult. These are the days you want to maximize on it, and unfortunately I screwed it up today. I didn't screw it up. I've made $800 on my other account, but that's not the point. Right, I'm going to leave it there for today, for this morning. I'll be back on at 1 o'clock. We are starting a little bit of bullish price action. I'm going to trail pendings underneath the lows as we push to enter a short position. If you're going to fade it, obviously pendings above the highs and try and ride it up. You would have just been triggered on a pending there, but the danger is obviously in a bear market we just do that. So I'd rather be short on this than try and fade this drop. There's a good chance it's going to happen, but I think there's probably a higher chance today we're going to get this, but who knows. Watch the other indices as well for clues. Yeah, they're all moving the same. If you see the Nasdaq flying down for ahead of all the other indices, probably going to find the rest of them are going to fly down as well at some point, but there's going to be a delay across all the indices obviously. But the stock market is the stock market. Don't forget, the vast majority of the people that are making this market move are entering 100 lot contracts at a time, and the institutional players are buying stock portfolios. They're not just buying stuff in the DAX, in the Dow, in the Nasdaq, etc., etc. They're buying stock portfolios. So when they make these transactions long, they're buying a bit of Boeing, they're buying a bit of Tesla, they're buying a bit of Apple, they're buying a bit of X, Y, and Z, and it moves all indices. This is why the indices moving the same way. The institutions are not just playing the DAX, they're playing the stock market. So everything moves the same way. So if you see one go further, it just means there's way more Tesla just been bought, but they haven't quite bought the Boeing bit yet. Then the US 30 will move. Yeah. Divergence. Dow's moving down, DAX is moving up. Yeah. So we got some bullish movement. We got the FTSE moving up at the moment. Dow moving down. So, just look at it's important to look at the market as a whole with indices. So yeah, pending. Every time we get a bullish candle, I'm trading those lows and looking for another one of them. Let's see if we get it. Right. I will be back at 1 o'clock. Anybody needs anything, come in the Telegram group. I will be in there. Hopefully we get some respite on these pounds today. And over the next few days, so there's a good chance we're doing a liquidity run. We got the budget today, so obviously bear in mind the budget. We'll probably see some volatility, but it's difficult to tell with the budget because it's all forecast. We kind of know what's going on with the budget, what's expected. It's if something comes out that's not expected, or something that the market just hasn't factored in, that we get some decent volatility. But we may well see this being the final push ready for that spring. Fingers crossed for that today. Okay, I will be back at 1 o'clock for the New York session. Have a good morning, hopefully, and I will see you this afternoon.